Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Crompton Consumer, whether it is a buy at just over 200 rupees or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I start with the analysis of Crompton Consumer, here's a small request that kindly support me through Patreon, and once you do that, it will help me grow the channel. And once I'll have more than 100 patrons, I'll be able to start with an education course on investment on YouTube for no extra cost. The membership begins at only $2 a month, that's 140 rupees a month. And also on that Patreon website, you can ask me any questions that you like with respect to stocks or portfolio that you have. Plus, you'll get exclusive articles and videos on Patreon, which is only for Patreon members. So, kindly visit the site and I hope you'll like it. Now about Quantum Consumers. This was established in 1945 and it is a leading consumer company in India with a 75-year-old legacy. So we have all known about Crompton and its fans and how Crompton has developed over the years as one of the marquee brands for fans during the 90s. This is the brand that I'm talking about. They provide fans, lighting, home appliances and pumps at the moment. A renowned national brand for fans, as I mentioned some 25-30 years ago, and they have developed into a consumer brand at the moment. The market cap of the company is around 14,000, 13,500 crores. So a small cap at that, and a good consumer company. If you look at the financials of the stock, then 3.5% sales growth has taken place in December. This is probably due to heavy competition from other brands like V-Guard, etc. And there are many that are coming in. Orient Electric also coming into fans and other kinds of electric products. So, and Bajaj and so on and so forth. The profit growth has been exceptional with a 50% profit growth, but you need to take into consideration the fact that actually the profit growth has been 100% and not 50%. The tax write back of 22 crores also has to be taken into consideration. So if you take that out, then the profit growth has been of around 70-72%. Exceptional return on equity of 42% and operating profit margin of 15%. Yet the stock is not extremely expensive at these levels of 200, 220. Again, I want to mention that the profit growth is not 50%, but it is 100% year on year. If you look at the performance of the stock, then the stock is up 40% in the last 5 years. On a 5 year basis, it is still up 40%. It's not that it is down, but have fallen around 35% from that February high. So it was around probably 290 to 300 rupees at that point of time. Numbers have been quite decent, and we have seen that how numbers have improved on the top and bottom line. But there is a problem with the promoter holding. So the promoter holding is low. It is not that the promoter holding is extremely high. So this might be a deterrent in itself, that the people are not looking to get into the stock when the promoters are less involved in it. But then there is high institutional holding, so the free float is not that big, around 20% or less than that. This lockdown situation will hurt numbers, so it is not that the company is going to continuously do well. I think the next 2 quarters would be difficult, and this is probably why the stock has not bounced back that well as it should have been. So you have to be careful while buying into it whole hog. Probably, if you want to, then buy into it at in a 10-20% staggered manner, because this situation could linger on for another month or so, and that would affect the whole FY21 numbers. Currently at attractive valuations, but I don't know what kind of a valuation it will command 1 year down the line, what kind of EPS the company would have, all the companies that are listed. So you have to be careful in that regard and have a good foresight as to having an understanding as to how the numbers would be. If we look at the technicals of the stock, then there is strong support at around 180 levels. So we are at 220, 219. So probably a long term, you can say stop loss could be at 180 rupees. The 200 DMA is at 245. Probably it would do well when it crosses those levels. It would really do well, but it doesn't look like at the moment with the kind of market condition we are in. Breakout is expected above 230. There are extreme resistances, many resistances between 225 and 235, and this 10 rupee band would see massive selling. So we are at 218, 219. Any move towards 227, 228 could see massive selling, and we could see the stock come back to around 200 rupees or so, because there is a short term support that lies at around 196 levels. So basically what you can do is a strategy could be on a technical basis, that whenever the stock falls below 200, you buy a few. Even if it goes closer to 190, 185, you buy more. And if it goes up towards 200, 220, you buy around those levels, but do not buy between 225 to 235. Once the stock crosses 235 levels, then it becomes a very good, you can say, buy on a technical basis for a short term up move. And on a long term basis, you can buy below 200 rupees. Those are good levels to buy at. So what needs to be done? Well, on an holistic basis, if you have the stock, then you can average at these levels or around 200, 190. When I said what the levels that I told you, that you can buy around the 200 rupee level and average your holding. There's no qualms about that. But do not buy the stock afresh. Do not buy into the stock considering that okay, this could be a multi-bagger, or this could go up 70-80% once the lockdown improves and all. It may well, but there are many other companies which are at discount. So most of the top marquee consumer brands are at discounts. Even in the mid cap domain, there are many, you can say, stocks which are of between 26-27,000 crore all the way to 6-7,000 crore, which are at discounts, and these are good consumer brands, white good brands that you can look at. So no need to get into this. This is my recommendation. You can take your own decision, and standard disclaimer applies. Look for other consumption plays and have only less than 5% portfolio or exposure into the stock. One more thing I want to say, that not all consumer companies would make a sterling comeback. It is only those which are marquee leaders and which are brands which will gain market share that are going to be big multi-baggers from these levels. So you can understand which stocks I am talking about. The top stocks in the consumer brands, white good brands, would continue to do well, and the laggards would continue to have a shrinking market share. So keep that in mind. So this was my video on Crompton Consumer. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.